Podcast is now starting. All attendees are in listen-only mode.
Hello, everybody. This is David here with Day Trader Like a Pro. Welcome to today's free training on how to use prediction points and RVI to pinpoint market entries with low risk for large market turns. Today's session is going to be led by Ephraim and Justin of Day Trade Like a Pro. If you guys are members of our Discord community, you'll know Justin as J Trader in our chat, and Ephraim is the founder and CEO, head trader of J Trade Like a Pro. He's in Discord as DTLAP. And some of you may have, we're doing today's webinar as a follow-up to what we did last week. We did something similar, but there's going to be some new content today. But we received a lot of feedback on the interesting knowledge that Justin shared in the webinar, and a few people missed it and they wanted to be able to participate. So Justin's been very kind enough to create some more time in his schedule to allow us to do this again. And with that, I'm going to pass it off to Ephraim to get us started in talking about prediction points.
Okay, great. I just want to make sure I'm sharing my screen. Is that correct?
That is correct.
Okay, good. All right, so far I'm 1 for 1 then. Okay, well, welcome everybody. I know some of you, I don't know some of you. And so it's great to have everyone here. And I'm sure we're going to have some people that are going to join in here as we get going. And also we'll have the recording available when this is done. So I want to start off a couple of things here. The very first thing that I want to say is that I signed up for my first trading course, and got into this crazy world of trading. I started as a futures trader. I've always been a futures trader. I've traded all sorts of different futures. I started on the Russell 2000 when it was on CME, before they sold it to ICE, and then back to CME. Those were back in what feels like the Wild West. It was $20 a tick, and there were 10 ticks in the point, and it was just so much fun to trade when you were making money. It wasn't as great when you weren't making money. And I've done everything. I've done currency futures and index futures. I primarily trade the S&P 500. Although I receive death threats daily to switch over to the NASDAQ. And it's been a really crazy, amazing journey to get to here. And anybody who's been a trader, and I'm assuming that's you since you're here, and if you have not started down this path, and this is just you starting down the path of being a trader, it's a roller coaster, and it's going to be a roller coaster. If anyone tells you that, I have a guy that I know, he said first year started off trading, made $970,000 his first year. And I said, I'm sorry, I just can't be your friend right now, because the next year or two for you are going to just be terrible. And it turns out I wasn't wrong. So, there's going to be these ups and downs to trading. And I mean, it doesn't have to be that way. It just tends to be the way that it goes 99.99999% of the time. So I'm telling you that because I want you to know that we're real traders. I trade actively every day. Justin's trading every day. David's trading. We're not really educating gurus. That's not really our thing. We do it because for a number of reasons. One of the reasons it's selfish is it makes us better traders. And we also have a passion for helping other traders. So I don't expect you to believe that we're here today and there's going to be an opportunity for you to sign up and do the course, but we really do intend that what you get out of the training here today is really useful and valuable for you. And I don't expect you to believe that we're here out of, it's not altruism here. That's not what really has us being here. I mean, there is a desire to contribute to you and to help the people that are ready for help to go to that next level in their trading. And we also benefit from that. And we are running a business here. There really is no shame in any of that. But I want you to know that we know that there are thousands and thousands of so-called educating gurus out there who teach because they can't do. And that's not what you have here. What you have is people who are actually teaching what they do. And it's a pretty rare thing to find in this industry, and to find people who are good at it. So I'm extremely grateful for Justin and for our other coaches here at Day Trade Like a Pro that are willing to take time out of their lives and help our other members. We have what I believe is the most extraordinary group of traders that, I mean, it's like, you know, Saturday afternoon or Saturday evening, and everyone's in the Discord channel chatting. And it's just like such a cool place to hang out and such a great place to be. And of course, you know, in the mornings during the open and when things are really moving in the market, everyone's there trading. And it's just such a great place to be. So in whatever way you're a part of Day Trade Like a Pro, and whatever way you contribute to that, you know, because I know some of you that are on here are a part of that, I just want to thank you for that. You really are the best part of Day Trade Like a Pro. So I just used all of my time that I'm supposed to be using to go through the slides. So we're gonna move on with it here. This is for educational purposes only. You should not be making any financial decisions, or this is not investment advice in any way, and you should not construe it as such. And you should make sure that you understand that there is inherent risk associated with trading, especially with trading futures, and that statistically you're likely to lose your money. And you could lose even more than all of your money. And it's important to understand how leverage and margin work. And you know, you can seek professional advice on how to handle those types of things, because that's not advice that we're giving you. Okay, so I'm going to just start off, and if you were here last week, I don't want to rehash a lot of the same things, and so we're going to move through it pretty quickly. But I basically want you to think about, if you're an institutional trader and you have tens of millions of dollars of buying power, what are you doing? What are you paying attention to? Are you looking at what the MACD is doing? You know, is that what the conversation is between these guys? Or are you using price? You know, that's really what these big institutional traders are using to determine where to buy. So I'm going to ad lib a bit here, and I'm going to tell you, I have a friend who was an early adopter in Bitcoin, and he had been buying and buying and buying, and it had kept going up. And I think at the time it had put in a high of like 10 or 12,000 or something, was pretty much the all-time high in Bitcoin at that point. And he called me up and he said, I have a couple $1 million that I want to put into Bitcoin. Where do you think I should buy it? Like, what should I pay for it? And I think it was trading around like 6,000 or 7,000 or something. You go back and look at the chart and verify the time frames that I'll give you. Then he said, and it was trading around 6,000 or 7,000 of Bitcoin. And I said, well, let me just look. And I pulled up the chart and I looked at it. And I said, if it were me, I would want to pay, I said, listen, it's really simple. If I was a big institution and I had hundreds of millions of dollars that I needed to move into Bitcoin, I would want to pay somewhere around 3,300 to 2,800. That's what I would want to pay. And then a little bit of time goes by. And if you remember, Jamie Dimon, the CEO of Chase Bank, said that Bitcoin is a scam, that it was a pyramid scheme or something like that. And the market sold off. And I want to say that the low, for whatever reason, it sticks out of my head, that the low ended up being 28.28. I could be wrong. I could be a little bit off. The bottom line is it traded into that zone, that 2,800 to 3,300. It traded right into there. And in the meantime, what was happening was JP Morgan was literally in offshore accounts buying $300 million of Bitcoin. And do you know where they bought it? They bought it between 2,800 and 3,300. That's the area that they bought it from. I've never bought Bitcoin. I will likely never buy Bitcoin. It's not my thing. Okay. So, but the point of that is that it's about price. And what I saw is the same thing these guys saw. They had $300 million they needed to move into Bitcoin. They bought right in that range. It happens all day, every day. And if you don't understand what they're using to make those kinds of decisions, you're really missing out. So why doesn't everyone just use price? And I'm not saying price action. Those are two different things, and I'm not going to get into that today, but they're two different things. Price. Simple, one thing, price, not price action. Not this went there and that did this thing and this. No, just price. What do they want to pay for it? Okay. Most people have a flea market trader mentality. They go from thing to thing to thing to thing to thing to thing. And if this is you, I'm sorry, the only thing that's really going to change is you're going to have to go from having this flea market trader mentality to you're going to have to stop that and actually start really pick one thing and get really good at doing one thing. It's not the strategy. That's probably not the problem. People are confused. There's 1,000,001 indicators. Oh my goodness, if you go download Thinkorswim, John Carter has all his stuff in there. I think there's about 4,000,003 indicators that come standard in Thinkorswim. How in the world are you supposed to figure out what you're supposed to be using? And then people can't map out the market ahead of time. They really don't have the ability to do that. And Justin's going to get into a bit of how he does that here. So I say if you can't beat them, join them. So how do you identify high probability trade locations where the big money is likely to trade, and then identify where that trade's invalid, and then identify the targets of where the big money is going to drive the market. And that is the way that it works. I mean, so enter prediction points. In 2007, we created this algorithm that would identify these prices for us. Yes, there's strategies out there. There's things like you can go and learn how to spot supply and demand, or you could go find how to do support and resistance. And Justin's going to show you some things today that he uses around Fibonacci. And I like all that stuff. I use a variation of all those things. But the bottom line is that prediction points from 2007 to 2021 have been through about every kind of market condition you can imagine. We went through the Obama lull where it was like 6 to 8 points a day on the S&P. I mean, it was crazy. I was reading through some of my old notes from back in that day. And literally the targets for the whole day were like 5 points away from where the market was trading. And it took all day to get there. It was just absolutely bananas that we traded that and made money during that time. So these kinds of markets are, today would be like a sleeper day in the S&P, and it was still, 30 or 40 points. And so the volatility right now is amazing. But these things have a way of just telling the story. And, today was just such a perfect example of how the S&P played out with prediction points. So this is not today. This is an old chart, but I just want you to notice some of these. The market goes from blue line to blue line. That's the theory here. And the white lines, the white dotted lines, if you see those are also prediction points. It's just the market's going to use those on the way to the next blue line. So that's the way that works. But I mean, look at all the opportunities here. If at this point, I think it should just kind of become common knowledge that prediction points are the best thing out there. There's nothing better than these. And you might not know that yet. You might be brand new. You may have never seen them. But and I didn't come up with them. I did end up buying them, so I didn't come up with it. But I am extremely biased to it because I've been using it for many years, and I'm just a big believer in that there's nothing really like them. This would be what we would call a bad day in prediction points. Here's not a great day, missed the high a little bit. By the way, we missed the high yesterday by a tick on the S&P. So we don't always get it perfect. But there are good tradable opportunities inside of here, and you can see those. You can see there's many opportunities here. So you're really not here to hear me, but I did want to kick off a little bit about prediction points. So I'll set this up like this. So Justin, actually, he and I met. He'll probably tell the story better than I will, but he was trading futures, and he was scalping for a couple of ticks on the S&P 500. And to me, I've just never understood that kind of a strategy. It didn't make any sense to me. And Justin and I started working together, and I think he saw some of prediction points, and he saw what, these things are really amazing. And I think he saw the light and came from scalping from a couple of ticks on every trade to Justin. I remember I always go back to this time, and it wasn't even all that long ago, but I go back to this time where we were having a conversation, and I think you were up like 35 ES points for the week, and you were disappointed. And I just laugh about it because, it's like when I met you, if you would have made like 3 points for the week, you would have been like over the moon or something like that.
Right.
And so it's funny. So it's been really amazing to see, Justin, to see your evolution as a trader. I was talking to Don, and he said, wow, Justin's come a long way as a trader, you know, over the months. So it has been really fun to see, and it's really great to be rolling out this opportunity with you and have you teaching the course. So thanks again for doing that. Thanks for being here today. I would tell you to turn off any distractions that you have, put your phone away, unless of course you're watching this on your phone, and just really pay attention to what Justin's going to do. I made a request of him that he'd really dive into and break down the execution and management of a couple of trades, the setup, and really go into detail on that. So without any further ado, Justin, thank you, and you can take it away. I think you can just share your screen and take over there.
Okay.
You need to make him presenter.
Yeah.
Oh boy, look at me already. So now I'm 1 out of 2.
I got him. I can do it.
I think I just got it.
There you go, Justin.
Perfect.
Great.
All right, let's pull this up. Can everyone hear me?
Yes.
And you can see my first slide here.
Perfect.
All right. Well, it's great to be here, guys. We're kicking off the second week here with the webinars. Want to thank everyone for spending some time with us. I don't think you're going to be disappointed with what we have to share. And again, I want to thank Ephraim and Dave and Day Trade Like a Pro for giving me this opportunity. Now, like I said, this is our second webinar, and last week I spent more time breaking down the components of the system. And this week I want to spend a little more time on the actual charts, going through some trade examples. I'll show you the trade I took yesterday. And if anyone missed last week's presentation, we do have it on YouTube for you to watch at your leisure. But I will just go really quickly through the presentation for anyone who was not here, so just so you have a context of what I'm talking about. So I created this trading system. It was over a course of a few years now, and it really started out with price action. So there's 3 main pillars to the trading system, and price action was one of the first things I learned. I really suggest anybody who's having trouble on the charts or somebody who's new to take all your indicators off and just look at price. And so with price action, we're looking at support and resistance and retracements that they call Fibonacci's, just really a fancy name. And using price action to get an idea of trend in the market, and using the candlesticks as well. Now, the second pillar of my system is an indicator, and Ephraim's probably going to smack me for this, but this is the only indicator that I use on my charts, and it really helps me to gauge market strength and confirm what levels in the market are going to have a reaction. And so RVI is similar to relative strength index. I'm sure everyone's familiar with that. And that measures the direction of volatility. Now, they both use the same exact equation. It's just that RVI uses the standard deviation of price change as one of the variables in the equation, while RSI uses the absolute price change. And so with this, I typically use it for divergence. And the divergences will give me a number of different indications of what the market should or probably will be doing. And that includes exhaustion of a move, whether it's up or down, continuation of a move, and then market turns on on the small scale, and then the larger market reversals using multi-time frame analysis. I don't have a lot of time in this presentation, so I can't get into the details of everything, but I do want to get into as much as I can. So the third pillar is prediction points. And like Ephraim said, I met Ephraim about 1.5 years ago now, and I was scalping. Now, for about a point or 2 points was the max, and he really helped change the whole picture for me. and get me to start looking for those larger targets. Because at the end of the day, if you're only scalping for a point in the market, you're shooting yourself in the foot, because there's so much action going on, especially in the markets over the last few years here. So I use the prediction points mainly as a roadmap for the day. And like Ephraim said, it kind of gives you these areas in the market where price should go to and price should have reactions at. And so I use them for the roadmap in the context for the day. And it also gives me that confidence in these bigger targets that in the past I had problems kind of holding on for. So if anyone out there has problem holding for their targets, I'd highly suggest getting the prediction points. I think we have a deal at the end, and just watch them and see how well they react on the market. And to a lesser extent, because they are highly reactive areas, they are good confluence for entries. Now, I don't use prediction points as one of the main things for my entries, but when they line up, it gives me that extra confidence. And so when you put them all together, you get the confluence and you get areas in the market where you can expect to have these reversals and great trade setups. So I want to jump to the charts real quick here. And last week, I went into all the details of what I meant by support and resistance and all that. So really quickly, and let me just clean up the chart here. I should have done this beforehand. Let me just take all of that off. And I just want to show you what I mean. So obviously, support and resistance, you can sit here and you can start plotting, and let me use this color. You can start plotting all these areas where the market seems to have trouble either breaking through on the bottom end or the top end. And you can go through here and you can start building up all of these levels. And it just, after a while, you end up having so many lines on your chart. The question becomes, well, what lines are really going to be relevant? So on top of the support and resistance, I also like to use fibs. And with the fibs, you can throw those up on the chart. And like the example last week, you can measure a leg, a move in the market, and I define what a leg is and how you draw fibs on the other presentation from last week. But you can see that there's a lot of reactivity here, especially at these three levels, the 38.2, the 50, and the 61. And so now you have some other relevant levels to look at. But at the end of the day, you end up having, again, so many levels that the question becomes which ones are going to be relevant. And you can start to build up confidence in these levels when you have your fibs lining up with support and resistance. And that's really one of the first steps. But this is where the RVI comes in. And again, you can watch last week's webinar where I go into a little bit more detail on what's going on here as far as the ranges and how everything works. But at the end of the day, when I'm looking for trade entries, I'm using the divergent signals. So that, again, covered last week. You're looking for a divergence between price and your indicator, like right here. And so when you have, say, your support and resistance, and you have a fib level, and you have your divergence lining up, that's giving you a lot of confidence in that level. So I want to start jumping into examples, and I highly suggest, if you want to kind of get more in depth into what I was just talking about, to watch that webinar from last week. So I had some examples that I shared last week, and here you can see you have 18 setups for the day from 5 a.m. to 2 p.m. here on January 12th. And I'm sure there are a lot of people out there that use indicators, and they see the same thing, where there are so many different areas where you get signals that it's hard to kind of decipher what's going to be most relevant. And so that's where I think prediction points really kind of help break things down, because like support and resistance and retracements, you're going to have so many levels, and this kind of lays out the more relevant levels of the day. So you can see here on a sideways day how we cut down those 18 setups to just 8 setups to look at. And then here's just another great example of the prediction points laying out kind of the roadmap of the day, where you have reactions keeping us below the KP here, finding support 50% between the two, which is a relevant level in prediction point theory, pushing up, finding resistance directly at the KP, and then finding support at the CP. And these are two different types of prediction points. So you can see how important these levels become day in, day out as you watch it. And in this example here, you can see how we were able to hold the prediction point at the low, we retested it, and then we held above. And when we held above and pushed up, we knew from prediction point theory that we were most likely going to come up to this level. And if not that one, then these two up here. And sure enough, you can see that we pushed up and we got our resistance here and our resistance here. Now there's a decent trade example here where you see this leg from here up to here. If you were to measure that with a fib, you would get a 50% level right in here. Now, on top of that, you also have your previous resistance point from price, and you also have the 50% of the prediction point all lining up in this area. So before price ever even came down here, you already were interested in looking at this area to see if price was going to have a reaction. Now, you can also notice here that we did end up getting what's known as a bullish hidden divergence off this final low. And this low was lining up directly with 50% of this leg. So these are kind of the things I'm looking at when I'm looking for my trades. So here's an example where I zoomed in to the chart we were just looking at, and I went to a 3-minute. And 3-minute, obviously when you dial down to lower time frames, you're going to get a little bit more noise, you're going to get a lot more signals. And so in this instance here, you can see, as I said before, we were holding the prediction point here. We came up and we held the second one here, and then it came up and it held this one, and we created a new high compared to previous price. So now we have this indication of a potential bull push. And on top of that, we also are holding above this CP. So before we could see anything going on the chart on the right-hand side, we already knew that we were holding these levels, and the next relevant level that we were going to go to was probably this up here. So as we pushed up and we created this new leg here, I went and threw a Fibonacci on here with a bullish bias. And sure enough, the 38% retracement lined up here with this previous resistance. You can see we came up here, found resistance, pulled back, and then we finally broke through. So not only did the 38% line up there, but we had previous resistance. And then as we started to approach that area, I noticed that my RVI was indicating potential divergence. So just as we started forming this candle here, this was now below where the RVI was, even though price was above. So the price pushed up, but the RVI was starting to push down below the previous low. And so that gave me an indication that there's probably going to be a reaction here. And so in this example, this is your signal bar here when you get that confirmation that there is divergence. And when the next candle opened, the idea is to get in as quick as you can, as long as your stop is below the low of that signal bar. And the rule of thumb is really at least 2, 3, 4 ticks on the S&P 500 futures. So in this instance, I like to keep a 2-point stop. And that really is just because of what my statistics tell me. And everyone is going to have to kind of come up with their own statistics and to see what they dictate. Some people can get away with keeping 4 or 5-point stops. For me, my best setups typically don't take more than a few ticks of heat. So it doesn't make sense for me to put that extra risk on.
Justin, can I ask a question?
Of course.
When you're thinking about a stop loss, are you thinking about it a lot of people, I think, in the trading world, and we've kind of been away from that for a long time of this idea, but I think a lot of people think I'm going to put my stop loss in and I'm going to leave it and let it play out the way it plays out. And I'm not going to adjust my stop or anything. I'm not going to move it to break even or whatever.
Mm-hmm.
Are you, just talk a little bit about how you're looking at that stop. What's the point of the stop being there when you put the trade on?
So that's, I guess you could call it my catastrophic stop, even though it's still such a small stop. But I found that most of the time, and just looking at my statistics of all the trades I've done over the last few years, every time I move my stop to break even, the market comes back and takes me out and then continues in the direction of the trade. So what I found most beneficial is to tighten that stop up to as close to that low of that signal bar as possible. And that's usually within those 2 or 3 ticks. And that's once the trade starts to work. So in the catastrophic event that there's no reaction here, it will get me at my 2 point. But once the trade starts working, I'm going to tighten that stop up to be just within the low of that signal bar.
Yeah,
and
I think that's an important thing. I think that's I think there's a lot of traders who aren't doing anything like that, or they're putting their stop really far away because they are guessing about where to get in and they don't have a way to really pinpoint that. But no one's right all the time. And this is really, your stop is there for when you're just not right that time, and it just goes right through it. It'll hit your stop and take you out and, on to the next trade.
Exactly. Yep.
Yeah. It's really great. Okay, thanks.
This is a great example here where you got, I should say first that, again, looking at my statistics, I have a high probability of getting that first 5 points. So I typically take my first part of my position off right around 5. Now, it could be based on some other things in the market. It might be at 6, it might be at 4, somewhere in that general area. But you can see here that if you move your stop to break even, you still have the other 2/3 of your position that would have been stopped out on this pullback. But had you have moved your stop up to just below the low of the signal bar, you would have been safe, and you would have gotten, I think this was like 15, 18 points. This was a 10-pointer. And again, you're risking what? A point and a half. So you might as well take on that point of risk, because you're going to pay yourself with that 15 and 10-point winner. Now, the other example here, we did this last week. So everything that I've covered so far, I've moved really quickly through, and that's only because we have the other webinar. But in this other example here, this is just another great example of how the entry would work using this system. You've got this level here, and I did not zoom out, but there's actually a 61.8 retracement up here. So we have a 61.8 retracement, we have our prediction point, and then we have this really clear bearish divergence, a reversal signal. And so on your signal bar here, where we came up right into this area, when this signal bar was showing the divergence, the idea is to jump in on when the next candle opens. And so in this case, with my 2-point stop, I was able to get in and still have, I think, 3 or 4 ticks of risk, or 3 or 4 ticks above that previous high. And so the trade ended up working out here. And I want to make a point that sometimes you're going to have a signal bar that pushes up right into your area. You're going to see the divergence. But when the next bar opens, you're going to be, say, 3 points from the previous high of the signal bar. And in that instance, it just, you could choose to just take on the additional risk or just wait for that next setup. So that's something to also consider. You're going to have to kind of filter out some of these just because of the risk you might have to take. And something else just to point out, I don't know if I said it, the third part of my position, the last third, I'm looking to get out just in front of a prediction point. So in this instance, it happened to be something like 15 points. But on this trade, it ended up being something like 20 points on that final part of the position. So the prediction points, in the past, I might have just gone for a few points or maybe just get my 5 points, but this is giving me a confidence that we're going to come back and revisit this level because we were not able to break through up here. And so that's how prediction points have really helped me to level up my P&L and my total trading game. Now, here's an example I didn't cover last week, and it's really somewhat similar. You have, and we're going to go to a 3-minute chart here where you can see the rest of this move, but this move pushes all the way up and pulls back here. And then you get this push up to here to the next KP. Now, if you throw a fib up on it, you get a 50% retracement level lining up with all of these previous resistance areas. And so this whole area here is now interesting to me as we're starting to pull back. And you can see we actually get a reaction directly off the previous resistance. But then when it pushes and pulls back more, now we start to see, as we break this previous low, we're looking here and seeing that the RVI was higher. So now we're getting an irregularity in the market. And so on this bar here that comes right into our 50% level, we get our signal bar. And then the entry was right when that next bar opened. And with my 2-point stop, this was literally, and this is why I use this example, this was the threshold of where I would enter. Any higher, and then my 2-point stop is now either right at the signal bar low, or it's above it. And so in that instance, I would have not taken the trade. But it ended up working out here. Again, you've got probably 2 ticks of risk on it, and pushed up and got to my first exit, which was 5 points right here at the KP. Now here's the trade out. I had to zoom out, put it at 3 minutes so you could see everything going on here. The trade ended up working out for the second target right around 10 points, but that final target just in front of the prediction point never worked out. And so in instances like that, it's really, again, you're going to have to see how, well, it's really about how you are as a trader and what your statistics are telling you, how you're going to manage that stop on that final position. Because it wouldn't make sense for you to get, say, 14, 15 points up and then let the market come all the way back and then stop you out for a loss on that final part of your position. So you can either trail your stop. So let's say you got your final 10 points here and you got the rest of your position going up here. Maybe you were trail that stop up below this low here. You know, there's a bunch of different ideas, and we'll get more in detail in the course, but it's really something that final position is kind of a freebie, and you want to let it work out. So I'll leave it at that.
Hey, Justin, let me jump in real quick. There's a question I think is relevant to kind of what you're talking about. So you've been walking through multiple time frames and, 1 minute, 3 minute. What time frames are you looking at overall? And then the second part of that question is when you're entering trades, I think there's been a couple examples where you're kind of in trend and you hit a pullback versus entering kind of at the top or the bottom where there's some exhaustion that's identified. So can you just talk about those things a bit and see how that fits in?
Yeah, so the trades where you're seeing the reversal like I did earlier, it happened to line up, like I said, with a 61.8 retracement of previous price action. So that's why it was giving me the confidence to take that short. But when you're in a trend, in this instance, I'm looking for movement in direction of the trend. What was the first question? I'm sorry.
What are the time frames that you monitor?
Okay.
And then is there a particular time frame you focus on for entries?
Yeah, so I'm going to actually get into that, but I'm looking primarily for the entry at the 3 minute, the 1 minute, and the 512 tick chart. And so those are the 3 most relevant for the actual entry itself. And that's really allowing me to pinpoint the entry and get it within that 2 points of risk.
That's awesome.
So maybe this is just a good time to jump into the charts and start taking a look. Let me see what time we have here. So I have about 10 minutes. So let's just jump right into the charts. This was another example from last week, and I don't want to spend too much time on material we already covered. But you can see that here's the 3 time frames. So I've got the 3 minute, I've got the 1 minute, and I've got the 512, and I've got a confluence of signals all coming off of this. This is a very relevant level that I've been watching. And so I was able to enter the trade right off. You see the signal bar here. And then I entered right when this next bar opened, which happened to be 58.75 here. And so this trade, I was looking to exit in front of the KP at 5 points and then in front of this KP here. And so here it just shows we ended up getting all the way down there. I moved my exit down here and ended up finally filling me when I moved it back to where I should have had it, right in front of the prediction point. And so that was just one example of a trade kind of in real time, as close to it I can do in a webinar. So let's jump into the charts, and I want to show some examples from this week that I think are really relevant. So first off, I want to show, now where's the chart? I had the chart queued, so just give me 1 second here. Okay, perfect. Can everyone see the whole chart?
Yep.
Yeah.
Okay. So coming into this week here, using my system, I was able to forecast this whole push up that started in the Globex on Sunday of this week. Now, I don't have time to get into all the details, but on Sunday when we made this low around 36.50, 36.56.50, I got indications using my system that we were going to have a significant push in the Globex and potentially coming into the first day of the week there. And sure enough, we did get the push, and I think we ended up pushing over 150 points off that signal. Now, not only that, I do want to go back to right here. When we pulled back here on the 15th going into the, or 16th going into the 17th, I got the same indication. And you can see there is divergence here, but there's also a little bit more to it. And I also got the same indication that we were going to get a pretty strong push here. And so using that bias coming into the Globex session here, I was able to kind of capitalize on this move by going to the shorter time frames and looking for entries. So I want to pull up a 1 minute here.
And Justin, I think just, I mean, if anyone doesn't have the context of that, I mean, last Thursday and Friday, we had some pretty hard selling. Yes. Which immediately continued on Sunday at the open of the Globex, and we've easily rallied, nearly 200 points off of there, I think.
Yes. Yep.
So it's pretty amazing coming. I mean, being down like we were down last week, and then Sunday opening, gap down, hard move down, and I think a lot of traders got really. I follow a number of different forums, and I saw a lot of traders talking about, hitting, getting to 3,500, and it's the bottoms falling out and whatever. And meanwhile, we're going, we're probably going to go test new highs.
Exactly. Yeah, we had this huge sell-off, and then it continued into the end of the week.
Yeah.
And I had a few people and some good analysts as well, like really seasoned analysts, saying that this was kind of it. We're going to head lower here. And I'm sitting here looking at my charts, and I actually recorded a video on the high time frames that I think we were going to send out. And unfortunately, in the video, I didn't jump down to shorter time frames and then explain the whole move. But it was a very, very bullish indication on Sunday that we were going to continue. And so when we made this low and we started pushing up and we broke that little gap, it was pretty obvious what was happening, at least from my perspective, just using the tools in my system. And so let's dial to the 1 minute chart, or where's my 1 minute here? Let's dial to the 1 minute. And I just want to show some of the potential entries you could have taken with that bias. Now, if I could get the right days here, came down. So right here, right in Globex, when we held this low, and you can even see on the 1 minute here, how we pushed way down, but then RVI came way up here off that final low at 56.50. And so as we started pushing up here, we started breaking these previous highs, there were some really good opportunities to capitalize on the move. And so you can see here that as we pushed up and pulled back to this previous resistance area, it ended up being something like a 61.8 retracement of this leg. You got this extreme exaggeration on the RVI. And so you could have entered right off that candle right here with a point of risk. So that was a great entry to get in on this move. And really, it could have been the only trade you took for the entire week. If you look, we never came back and we pushed, you know, whatever that is, 175 points, almost 200 points. Now, if you missed that, there were plenty of other opportunities. So here's a great example of a trade that does not necessarily line up with a beautiful Fibonacci level, but you do have all of this previous price action and resistance, and you get your first signal off of this low. But here's something I want to point out. There's other things to the system that I don't have time to get into, but you can see here that we then pushed and made this new low in comparison to that one, but the RVI was way up here. And so this was another indication that we were potentially going to turn here. And again, another, what is that? A point of risk from that low. So 2 points of risk on the S&P 500 to go at least to the KP, which was, you know, over 10 points. So these are just some great examples of how you could use your bias in the market to enter and find these trades. Here's another great example when we pushed up. If I could get this. You can see price pushed up from here, and we have this nice previous resistance spot. And when price came back down to it, we ended up getting another continuation signal off of these previous highs. And really, any of these trades, if you just took one trade and you had that third position to run, or maybe you had a fourth of your position to run for wherever it would go, not just to the next relevant prediction point, you could have really grabbed this whole move up. Let's see here. Does anyone have any questions?
Justin, I think one of the questions that came up was, do you use this outside of RTH? And I think the answer is that is very clearly yes, as you just showed that example on how you identified that divergence in the run up on Sunday.
Completely. Yeah. It works in no matter if it's RTH, ETH. It doesn't matter if you're looking at Forex or, you know, whatever futures instrument you're looking at. It seems to work anything that I look at.
It's a great question, great point too. This works in any market, doesn't matter. I mean, I know you focus on the ES and that's your bread and butter, but this methodology and this system works in any market.
Yes. Now I want to point out what happened. So yesterday, I think was a great example for me to show.
Just before you get too far away, I want to just point out one thing that hadn't really occurred to me much. I mean, you're an active intraday trader, but
yes,
the principles that you're teaching would work on any time frame. and somebody could use it for swing trading or position trading. You know,
completely.
and they could do, I mean, I consider myself, and I think you would probably consider yourself more like a intraday swing type of trader, like you want to capture a bigger move. And you've shown some good examples of that, but also you can use this to forecast, I mean, to trade. I mean, you could find a trade like from Sunday night and hold that. Since we're not done going higher, we can hold that for a bigger target on the upside.
Yeah, and I think that's one of the great things about that the part of my system that I haven't shared, and it's going to take more time to share. You could have had that bias on Sunday in Globex and thrown a position on and maybe even average into the position and just held it all week and really had just one trade for the week that really pretty much grabbed the entire move. I have one final example because we are getting a little late in here, and that is from yesterday. I want to show you the only trade I took, and it occurred right over here just after the open. So I'm sure everyone remembers if they do trade the ES or even the NQ, everything was pretty sideways the night before yesterday's open. And since we ended up holding this level and breaking above the highs of Globex, it gave us an indication that we were potentially going to push into another bull trend. And that's not surprising with the indexes right now. Just seem to push relentlessly forever. Won't be surprised if we're at over 4,000 just in the next few days. So this is the only trade that I took right here yesterday. Let me put that up there. Now the market opened right here and right out of the gate pushed and broke those overnight highs. And so we pulled back, and now on this first pullback, there wasn't a clear indication using my divergence setup. But when we pushed again and we pulled back to all of this previous price action here, and if you were to measure the leg, I'll just do it here, you'll see that we pulled back exactly to the 61 and pretty much in line where we had this resistance where price pushed up to this level, couldn't get through, pulled back, tried again, pulled back, and then pushed. So we had all this previous resistance, we had a 61.8, and then directly off that 61.8 for just this one micro leg right here, we got this really glaring divergence off that low. And so I jumped in here, and that was my only trade for the day. I ended up holding it all the way until I think something like 9:30ish, and I was done. And so that's really the beauty of this system, is you don't have to sit here and trade every single move, because you are going to get a lot of signals and you have the potential that you could chop yourself up. So I think the allure, I think the best part of the system is having the forecasting ability at the beginning of the market to have a good indication of where it's going to go, and then jumping down to your short time frame and getting in the market at an area that makes sense with very low risk, and just calling it a day. And so I think that's all the time I have. We got to jump into the end of the presentation here. But if you have any questions, please don't hesitate to ask. Let me pull up the PowerPoint here. And so what I'm doing is I'm offering a month-long course where we're going to go in depth into all of these concepts and go into how I was able to forecast the bull run this week, and same thing last week on that big pullback. And we'll get into details on entries on the tick chart and the 1-minute chart. And it's structured in a way that we're going to have 4 90-minute interactive training sessions. So every week we're going to meet on a Tuesday, and we're going to spend time breaking down every single component of the system. And then we're going to spend another day that week on the actual live market. We're going to go into a chat room where I can share my screen, and we're going to actually apply the concepts we learned that week on the live market in a real world scenario.
So
we have
so I just want to recap that. So it's not just concepts or ideas. You're actually going to you'll go into a room. We utilize Discord currently. But you go into a room where you can stream your screen, you can point out the things that you've been going through that week. And I mean, it's just, and actually trading what you've been going over or covering over the last week or 3 weeks or 4 weeks. So
yep, and it'll build, the idea is to start with the basics and build up to the, have the complete system at the end of the month.
Love it.
And I'm just really excited because my whole goal here is to have a group of traders that trade this system, and we all can get together and trade and make money together. So I'm looking forward to it.
Yeah, I think just to add to it, I think it's the key thing too, is this is going to be a smaller group. It's an intimate group, so it's interactive. You get to ask questions, you get to support each other. We're going to have a dedicated Discord channel just for the people in this course so that they can help support each other and ask questions, and you'll have access to Justin throughout. I'm actually going to be taking the course, and I'm looking forward to being part of it as well. So this is going to be killer.
Yeah, I'd be open. Any questions you guys have, my goal is to have you understanding the system 100% so that you could start using, jumping on the market and actually putting it in action. So we do have the offer here, and you can go to the website here to sign up if you're interested. Now, I will say that trading is very personal. So one system, you have to find a way of trading in a system that works with your personality. So if this is something that is not appealing to you, then obviously it's something you skip. But I think that there are a lot of concepts in here that are going to help traders regardless of what kind of personality you have. Because like Ephraim said, you can apply all of these concepts to the larger time frames and swing trade this, or you could dial down to a 512 tick chart and scalp away. So there's really a lot of options, and it's not just like there's one trade and it has to, there's a system that if you apply the concepts, you can find plenty of areas in the market for opportunity.
And just so everyone, for ease of use for everyone, I have posted the link. Hopefully you guys can see the chat. I did post the link. If you want to sign up for the course, you can click on that link and it'll bring you right to the sign up page for that. And you'll also receive an email from us with all the course details and how to sign up that way too. And then, Justin, I'll cover this part. So for anyone who is new to Day Trade Like a Pro, and I'm looking at the list, I think there's a few names on here that I don't recognize. As Ephraim mentioned, you don't have to take our word for it. Come check out and try Prediction Points for free. You get 30 days of unlimited access. It covers all of the markets that we have for Prediction Points, which is the ES, the NQ, gold, the Dow, and RTY. There's some detailed training on trading strategies around that, and you get access to our members only Discord room. Some people say that the access to the room alone is worth the monthly subscription price of Prediction Points. So that's a great opportunity to come in, try it out for free, and if it works with your trading system, great. If not, no risk to you. And then the other thing that we offer with the trial is Ephraim calls out the best trades of the day with Prediction Points and what we call our live trade signals. That system averages somewhere around 20 to 25 points a month, ES points a month, very low risk trades, high profit opportunities. So if you want to add that to your trial, you can try that for $147 a month and add that to it. So I'll post a link for that here. into the chat if you want to sign up. The free trial is really intended for people who haven't tried us out before. So if you've done a trial, you're going to have to, you'll have to sign up for a subscription. But if you haven't, you know, definitely try us out. Check us out.
And just to clarify that, if you're doing the course and you've done a prediction point trial before, we'll give you another prediction point trial.
Yes.
In which
absolutely.
case you should just do the course, because it's, you know, just a little bit more and you can have the course. So
Exactly.
that would make sense.
That's a great offer.
Do the course in that event.
Yeah, that's why I was going to say that you do have the opportunity to get these for free. And if you're taking the course, then you're going to have them on your chart to watch at your own leisure as well. And this live trade signals is really great because Ephraim is giving you exactly where to enter the market, where you should exit if it doesn't work out, and then how to manage the trade and where you want to take your profit. So it's a really great system.
We're not destroying it in there or getting every tick that there is to get, but David, that statistic sounded low. I know I've been really bad the last month, so that could possibly be. So I guess, what are we, 5.5 months or something, and we're up 200 and just shy of 300 points in 5.5 months.
Yeah, 278 points.
Yeah, 278 points in like 5.5 months, I think is the something like that. 6 months.
Correct. Yep. And that's an average of.
I mean, when you do the math and you go, okay, 278 points, and you know what you would pay for it, it's you come out ahead on the end of that deal, and we're letting you try it for $147. So
easily pays for itself.
Yeah, that's the idea.
Yep. Now, just to kind of close out the presentation, I do want to talk about what I have planned here in the near future. First of all, I am available if you do want to work with me on a coaching one-on-one basis. But I'm also going to be opening a live trading room. I'm thinking probably at the end of the course, sometime in March. We still have to work out the details. But essentially what I'm hoping is that I have some traders that are going to join me, and we all use this system along with the prediction points to make some money in the market. We're going to do pre-market analysis. Again, when you get through the course, you're going to learn how you can forecast the open. And so every morning I'm going to get on there and just do it live on screen. And we're going to forecast the open, and then obviously throughout the day, I'll be sharing the charts and showing where I like to enter the market and how I'm managing my positions. And obviously, education and market commentary will be coming from that, just naturally, because we're going to be talking about the market all day. So I'm hoping that there are some out there that are interested, and I'm really excited to get it started.
I would add, just to wrap it all up here, I would say that the live trade room is going to be a great opportunity. And for anyone who's kind of been on the fence about doing the course, you'll want to have the course as your foundation for being able to come and trade live in the morning with Justin. So I would think that would be a relevant thing that you'll want to have access to.
Yeah, the course is going to give you all the information so that when you're with me on the market, you understand what I'm looking at, why I'm entering, and then obviously you can apply the same concepts. So
yeah, and there's a couple questions coming across around exactly what the room's going to look like. We're working on defining that over the next couple of weeks. I'm sure by the first or second week of Justin's course at the latest, we'll have all of the details worked out, how long the room's going to be open for, what the price will be, etc. So stay tuned for that. We'll make sure that we communicate that to everyone as soon as we have it. We just have some details to work out on our end first.
And let me just emphasize that if you're having any trouble in the course, I'm available to you. You have any questions, we can talk. It's not limited to 90 minutes and then you don't see me again until the next course. I really want to make sure that people understand and can apply all these concepts for themselves. So
That's great. Well, I think that covers it. If anyone has any questions outside of this, you can always email us at support@daytradelikeapro.com. If you're in Discord, ping us with messages. You know how to get a hold of us there. But we're available. We're here to support you. And Justin, thank you so much for your time today. I think what you're doing here is outstanding. You've been very gracious with your time and sharing your knowledge and sharing this with the group. And like I said, personally, I'm looking forward to taking your course as well.
Great. Same here. Really appreciate this opportunity, guys.
Well, thank you, and thanks for everyone who attended today. And I know we're a few minutes past, but thanks for hanging in there with us. And you have any questions, feel free to reach out to us. You can shoot us an email, support@daytradelikeapro.com, and we're happy to answer any questions. And we'd love to see you in the course and in the Discord channel and see how we can help you really take your trading to the next level. So with that, David, anything else we want to say?
That's it. All wrapped up. Great.
Well, thank you, and we'll see everybody soon.
Thanks, guys.
Thanks, everyone. Bye-bye.